Welcome back to the Kaiser Report. Time now to go to London and talk with Ned Naylor-Leyland. He's a fund manager at Cheviot Asset Management. Ned, we've had loads of demands from viewers of the show to talk about silver. You are an expert on silver investments, so give us a brief history of silver's role as a currency and as central bank reserve and where it is today in 60 seconds. Go, Ned.
Yeah, thanks for the softball question, Max. I think obviously most of your viewers are fairly aware of the role of silver as a currency historically. I think in sort of double-digit terms around the world, the word for silver and money is interchangeable. Silver is probably more relevant at the moment in terms of the of a monetary asset over in Asia, where the Chinese are obviously buying a fair amount of the stuff along with gold through their bullion shops. But look, you know, I think we're all of the mind that fiat paper currencies are in a state of distress, if not collapse.
Now, you mentioned China. That's interesting because one little factoid, I don't know if you've done much study on this or not, but during the 1920s and 30s, during the Depression, of course, China, from what I understand, was on a silver standard. Isn't that correct?
Yeah, China have been on and off. And actually, it's funny you bring that up because it's certainly true that the various international leaders of history, probably ones of ill repute in terms of modern historical context, operate on silver standards. It's absolutely true. And the Mao regime were involved with that, as were actually the Mongols preceding that. So there's a lot of history of Chinese involvement in silver. But as there is all around the world, this is not something that could be laid at the door of any particular country. Certainly here in the UK and in the States, it's less well understood within historical context than it might be elsewhere.
Okay, now one of our viewers, Ned, goes by the name of Tears of the Moon, asks, why is silver 65 times cheaper than gold when only 9 times more silver is mined per year versus gold, and the stockpile of silver bullion is 10 times less than of gold?
Well, I would love to be able to give you a straight answer on that. I think everyone's looking at the gold-silver ratio with some interest, and obviously on a historical basis, we're at an extremely high level. I mean, for what it's worth, I'm not sure it won't go a little bit higher if there's a deflationary downwave and another asset collapse phase, which I think a lot of people are expecting. But in terms of why that is, well, I think this all plays into the whole discussion about silver being an extremely strategic resource in terms of global commodity markets, probably alongside water in that context, in as much as there has appeared to be intervention on behalf of industrial users and other users of the metal, which has led to a lower price than ordinarily ought to be the case. But yeah, I mean, you know, historically, I think that the right level looks somewhere between 12 and 16 to 1, and we're up in the 60s. But as I say, I think it could go higher in the meantime.
All right, now here's, you mentioned deflation, and I really want to pick your brain on this idea. Since the credit collapse started in 2007-2008 period, we've been basically in a period of deflation, and the precious metals have done well. Now, to many, this is counterintuitive, but there is an economic case to be made for why precious metals should do well during deflation. Can you speak on that a little bit?
I think probably the whole argument about inflation and deflation has got a bit skewed. I think the reality is it's a lot more complicated than people make out. Sure, asset collapse phase lead to what people would term a deflationary environment, but I would argue that the average man in the street is not witnessing lower prices in the things that he's buying. So I would be a bit cautious about referring to anything as either an inflationary or deflationary environment. I mean, for what it's worth, I'm from the camp of anticipating serious stress in the unbacked fiat paper environment. So, you know what, I do see the potential for hyperinflation, which I think is probably the reason why it's doing well more than anything else. I think people's concerns about the true nature of paper money is more where this is leading, as opposed to necessarily what you would describe as an ordinary economic discussion of deflation versus inflation, Max.
Okay, so deflation and hyperinflation are two sides of the same coin. And what we're seeing here with asset price deflation is killing the global credit market. And there's no velocity of money. There's no multiplicity of money. The money supply is shrinking. And this would normally be bad for precious metals. But it's so severe that that what the bullion purchasers are now looking for is hyperinflation or a currency collapse. As you point out, the fiat currencies are collapsing. Now, let's move on to silver. Has also been in the news this year since the shocking testimony by Andrew Maguire via GATA. Bill Murphy and JP Morgan has been engaged in silver market manipulation. Tell us about this silver manipulation by JP Morgan, also the role of silver ETFs, the exchange-traded funds in the manipulation, if any.
I'm not sure about direct involvement with the ETFs in the actual manipulation. That may or may not be the case. I think it's very difficult to hang your hat on stuff like that, and I would probably try and avoid doing it. But what I would say is that the evidence seems fairly clear that massive amounts of paper silver have been deployed by institutions in order to depress the silver price. What exactly the rationale for that is, I'm not sure. But I think that probably the most telling thing of all about this story is the fact that it was a fascinating debate that took place. And, you know, JP Morgan were accused of effectively high crimes. And, you know, we've heard nothing since, which I think sort of gives context to what really took place there. You know, one would have expected by now at least some attempt to fight back against these allegations. But I think the very fact that hasn't happened is quite telling. I thought it was very interesting yesterday as well, seeing Bart Chilton talking about the financial reform bill, where he was talking about how they've now been allowed to enforce speculative position limits on the COMEX. And he was talking about how this was a heroic piece of legislation. Now, forgive me, Max, but I'm a bit of a skeptic about all this. I think by now they ought to have done something. So I'm pretty skeptical as to whether or not that's actually going to happen. You know, there's no doubt that the bullion sales are going up. I can tell you for a fact that in London it's very difficult to get hold of physical silver. If you can get it, you're getting it in small amounts and enormous premiums. And I just think over time, the lower price point entry for silver versus gold, as people start to take a view against a 40-year global unbacked paper money system, will lead to people wanting to invest in silver as a store of value as much, if not more, as gold, particularly bearing in mind the fact that above-ground bullion inventories in silver have been hugely exhausted over a very long time frame, as against gold, which of course has been stockpiled and the reserve has grown.
Look, if people are not willing to take physical delivery of silver, they are setting themselves up for a huge disappointment, because JP Morgan can short phantom or naked short sell or counterfeit naked short positions in the silver futures market all day long. So unless somebody steps up to the plate and stands up to the cartel that is JP Morgan, I call them financial terrorists, because they're destroying the global economy and causing poverty and famine around the world as a result. Innocents are getting dying because of this type of manipulation. If no one's standing up to them, then we shouldn't complain. We should just take our medicine, lie down, and believe like,
there is a degree to which one has to sort of look at the situation as it actually exists and deal with it accordingly. And my personal view, and has been since 2001 when I first started investing in this metal, that the way to do it is to incentivize other people through information to take delivery of, let's say, small, medium, or even large amounts of physical silver, which puts stress on the underlying, structure of this market. I mean, incidentally, my best bullion dealer contact in London tells me that something which hasn't been the case before is that his large allocated silver bullion accounts are being charged by the warehouses in a way they weren't before, which tends to suggest that some of the movement that's going on there is causing some stress and some cost to the warehouses. So I think it's difficult to know exactly where we are with this, but personally I get a sense that things are improving. Certainly the public's understanding of it has come on leaps and bounds, and it seems to be a subject which people are getting their teeth into now in a way they weren't before. So, while I accept what you're saying, I personally see silver as the Achilles heel of the cartel, for want of a better word. And I think it will prove to be the case that as the little man takes advantage of the situation of a low price point and drives the physical out of the warehouse inventory, the squeeze will come.
I agree with you. It is the Achilles heel, and it wouldn't be difficult to bust the COMEX if guys like Sprott up in Canada stuck to his word and did what he said he was going to do instead of chickening out at the last minute. All right, that's all the time we have for today, Ned. Thanks so much for being on the Kaiser Report.
Not at all. My pleasure, Max.